All right, cough button. Hello. All right. All right. Here we go. All right. Let's see. What was wrong with that? That's the way. Hey. Hello. Something happened to that mic. Interesting. That's okay. We got this one. We've got many mics. All right. How you doing, friends? This is Ernie, and this is the final hour to expiration. This is the trade where we trade the very final hour of expiration for options on the SPX, or the XSP, if you prefer. But the XSP will only trade on Monday, Wednesday, and Friday. I made that mistake today. I traded the XSP yesterday, and I got a pin trade that was 1 penny away from being a perfect pin. That is my closest pin yet. My closest pin that I have ever gotten. My next best one was 17 cents. But if you were going to compare them, right, the XSP is a 1/10 the size of the SPX. So my closest pin was on my previous to this was on the SPX, 17 cents away. So if you were to compare them, you would have to multiply 1 cent away by 10 cents. It's still the closest pin, so that would be equal to 10 cents, right? That's pretty darn good. So hold on, I gotta do this again. Let's see. Oh, that's what I was doing wrong. Okay. Hold on. Yeah, I forgot to unmute that one. All right. I got this little soundboard here. Oh, and I'm on the wrong camera. All right, we've got it together now. All right, so first of all, let's say hello to 123 Happy Street. And for Brian, how you doing, Brian? And Mohammed. And then, of course, 123 Happy Street is playing the sarcasm game and mimicking the troll that we had yesterday. He says, "What's the trade? Where's the post? Why haven't you posted it yet? How is it a winner if you lost? You don't score the losers unless you win. I need answers." Yeah, that guy is gone now. You know, if they really want to find out, they'll just join the service, take the trial, right? The fact is that I am the most transparent operator of such a service anywhere. And when you get somebody in there trying to really just throw a monkey wrench into the gears, you want to go, ah! Not really. Uh-oh. That might be a YouTube strike there. Violence. All right. We got Jago. How you doing? And Robert from Austria. And is V. And new person. I don't know. 010. Let's see. Oh, you know what that is? Is that a butterfly? I don't know. And JP, sweetie, how you doing? No, JP is definitely not a troll. I had a little, how you doing, Roberto? I had a little peanut butter sandwich just a little while ago, and it seems to have stuck in my throat. All right. Ah, and Francisco Lebron. How you doing? Wow, we've got everybody here, and I'm sure more will join us. Here, let me get this mic pointing right at my mouth. See, I'm not sure if I like the boom mic or this mic. Right? This mic sounds like NPR, and this mic here is much brighter. Yeah, we have Vadim. How you doing? And Mike B. All right. All right. So today, let me go over today's trade. The trade that we took today in the service, which is distinctly different from what we are. The boom sounds more natural. Okay, good. Good to know. So unless I want to sound, do a podcast and sound like NPR, right? Oh, Mike, he says, whatever you do, that's fine. That's great. That's what I like to hear. Okay. I'm just rearranging the furniture here. Hold on a second. Ah, Crazy Head. How you doing? Thank you for showing up. And Multi-Scan 8. Fantastic. Wow, we got a full house here. So let's talk about the trade that happened this morning. So first of all, let's go to the charts. And we're off to the charts. Okay. This morning we had a pop in the market, and that was really due to the PPI that was announced this morning. The PPI is the Producers Price Index, and it's a survey of producers or manufacturers, and it's considered a leading indicator of inflation. It showed some good numbers on the monthly, but it didn't show such great numbers on the month over month. So at least from that perspective, it wasn't a negative. So a negative, I guess, in this bear market rally is a positive. So we have a slight positive look there. Of course, we also had the unemployment report, which was right in line with everything. However, it's still showing a gradual increase in unemployment claims for the past, 15, 20 weeks or something like that. So there's that. Overall, I would say that the market looks at this as, and of course the unemployment report is a lagging indicator. Overall, I would just say that this is a continuation of yesterday's CPI report, which is like the PPI report, except it's called the Consumer Price Index. And it is also a lagging indicator that indicates where inflation might be going. But it doesn't really tell you where it's going. It kind of tells you what the current state is. Now, you have to take everything into context. So yesterday, the president came out and said that, hey, we have zero inflation, which was, the way he said it is an outright lie. But what he was trying to say is that inflation did not increase at all last month, right? So to him, that's zero inflation. Zero inflation for that month, like as if that's something notable. We still have 9.1% or 8.6%, whatever it is, a lot of inflation. And so, I think that he's a little tone deaf and out of touch with what the average American is feeling. But to come out and say that we have zero inflation, yes, if you wanted to be technical about it, inflation didn't increase for the aggregate number of things in that month. But for many things, it did increase. For some things, they came down. But overall, inflation is still way up here, as high as it's been for 50 years. So it's not no inflation. Sometimes it's just unbelievable. Anyways, today's PPI was more or less, now the market took the CPI as, something spectacular, as if all our problems are solved. We've reached peak inflation. And of course, we've heard that before. And of course, they're forward looking and they think that the market should go to the moon. And so the market is going to the moon, except for today. It had a little continuation to that. It went up for a little bit, as you can see, but then it just gave it all back. Now, from our analysis, beer inflation is killing JP Swede. Okay. And Mohammed says, beautiful trade today, which I hesitated on because of pricing. So perhaps I may be able to take a final hour trade. Well, let's hope so. All right. So today, the price went up, had some trouble, ran into issues. Those issues are these gating green lines here. The green lines are what we call the LVNs, low value nodes. And it's they're extreme low points in a volume well, or a lack of volume in that particular area. And it acts like a gate. Either it lets price through or it rejects it. Either the gate is open or the gate is closed. So we have two of these in succession in an attempt to run up into this volume well. Let's see. I'm going to bring this right over here so I can look at the chart and have the microphone right in front of my face. There we go. All right. So let me explain. Let's bring this back to a 15-minute chart. And here you can see that this was the run up from yesterday's CPI, and then we ground up, and then overnight we went sideways. PPI was announced and we went up, tried to break into this rather large volume well here, and that's significant. So let's go to the daily chart and see why that's significant. So you see I have it marked off, the volume well. The reason why it's significant is that if we break into this area, there's very little liquidity, and that means very little to stop price from going up another 100, 150 points. And see, that's the issue. If it gets in there, that's what's going to happen. Now, these very low points, these green lines, the LVNs, you'll see that they mark off extreme low points in the volume. They are significant. And there are two of them that are acting like gateways into this volume well. If they weren't there or if they were breached, then there's a good chance that price would go all the way up right into T2, which is another volume node. And that would be just another leg up. And market then would have would be in very serious contention for perhaps even going to new all-time highs. That's what I'm seeing, which is completely, I mean, there's a cognitive dissonance here that is just unbelievable. No one can actually wrap their heads around how you can have an economy with an inverted yield curve and such unbelievably bad numbers, inflation higher than it has been in 50 years, and say that we're in a good spot here. And of course, we know the job numbers are misleading. Why are they misleading? Well, first of all, the participation rate is lower than it's been in 20 years. And so we have fewer people that are being counted for jobs. So that gives a sort of a false indicator about where jobs actually are. So, there's a lot of stuff like that the news media and these frontline numbers or top line numbers that they will take and then run with and make things seem like they're different because it sells eyeballs. Well, it sells 2 eyeballs. They get eyeballs. So anyways, we had these 2 LVNs and the price went up there and couldn't make it through and was rejected. All right. So we can see that, and let's zoom in a little bit. All right. And so we can see the rejection there, the 2 red bars. We'll zoom in a little bit more. All right, there's the rejection and the 2 green LVNs, the low points in the volume well. And they've rejoined into T1. Now the trade for today was to look at basically the POC of T1, the point of control, or the area of T1 that has the most volume. Which level has the most volume? And so that's a multifaceted answer. The answer really is a combination of recent volume that we see here and much older volume. So you'd have to go way, way back. And so if you took the aggregate, I found that it was around 4205. So that's where I put a butterfly, or I recommended a butterfly strategy that right at 205 and about 10, 15 wide. 15 wide would have been good. And that gave us about a 1 to 7 to 1 to 9 risk to reward. So here's the results of that right now. This is that current trade. And you can see that it's well into profit. As a matter of fact, if each individual contract that you paid $115 for would now be worth about $300. All right, so right off the bat, 3x return. And there's the distinct possibility that we could ride this into the close. It's only a half hour from the close. It could gain another another $500 potentially. Now, will that happen? I don't know. Will it move out of this range? It could. As a matter of fact, it looks like it's moving right now as I talk. Now, our strategy for something like this, and you can see there's a little bit of off the bottom. So let's zoom in on that a little bit more so we can see that. All right, so there's a little bit off the bottom right there. We'll go to a minute. All right. So we move down right into that area. This is where the POC is, or the short strikes. If price ended up right here, that trade for about $115 invested would return about $875. So right now it's just off of that. So it's a good trade. Now, what we recommend for members is that you consider, if you have multiple contracts, that you want to take some of those off and lock in your profits, and then leave a minority of them on to potentially go for the pin. Now, the pin, those pinned trades, so even though, let's say that you had 5 trades, 5 positions, and you took 3 of them off, right? They're each returning $300, so they'd be worth about $900. You have 2 left that cost you a total of $230. So easily, fantastic profit. But if you left those 2 on and they pinned, they have the potential for making another $1,800. You could even take 4 off, right? You take 4 off, you've locked in $1,200, and then 1 more could bring back $800. So that's why you do that. Now, if you have a smaller account and maybe you only have 1 position, you're probably going to want to ride this out a little bit for as long as you can. I mean, we're really close to expiration. We're only 27 minutes away. And so I would hold that for as long as you can. Now, where do I think price is going to end up? That's a good question. And in this last few minutes, it could do anything. It could run right up to the very top here and go to the POC of the day, which is right here. So if I were to bring in all of the data for today, the POC is at 4235 or so. That might be where price is going. As a matter of fact, I'm willing to bet that that's where price is going. And maybe I'd be willing to bet by putting on a strategy that's somewhere in between here and there. And if we run through it, then we can profit from it. So how would that work? Yeah, it's really moving, isn't it? Look at it. It's like all of a sudden it got a new life. It's backing off a little bit. I might be wrong. It might end up right here, right on this little minor node. I think what I'd like to see is I'd like to see another try at this and see what happens here before we take a position. I would, I'm willing to bet that it's going to, let's see, let's take a look at the options chain and see where the weight is. So north of here, our most voluminous strike price on the call side is at 42.50 with 40,000 contracts. But 4,200 here has 75,000 contracts on the put side. So I would have to say that it's probably going to happen somewhere between these two, probably leaning towards the 4,200. So that's what I would try to do. I would try to create something that spanned that distance, maybe at 42.30. Let's try that. See what that looks like. All right, we need to turn this off. Oh, we have the wrong date. Why is it giving us no price? That is really weird. Are you serious that costs nothing? I doubt it. Let's try to go 42.20 and 42.40. All right. It can't possibly be that price. It can't possibly be 20 cents for that. How can that be right? Oh, that's the SPX. Man. Is this a mispricing? The date's right. 8/12 and 8/11. Man, am I doing something wrong? Should I not take this trade? It'll cost me 10 cents. I'll pay 20 cents for it. Let's find out. Will that fill? I'll pay 15 cents for that. What the hell? Let's take that to 15 cents. I'll pay 20 cents just to make sure I get it. Is it going to fill? I don't know. That's so weird. Now it's climbing. Oh, I got it for 20 cents. That is crazy. Why? I mean, that's like the best bet in the world. Why wouldn't anybody make that bet? I mean, even if I lose, big deal. I don't understand this options pricing here. That could be telling me that there's no way in hell it's going up. I mean, that might be what the market is telling me. Ernie, you just made a fool's bet. There's no way in hell that price is going up. Between now, even if we get some volatility and it moves up, I'm going to take it off. Let's see. That would be the SPX trade. Closing order. All right, so I have a closing order. I'll keep it right here so I can watch it. It's worth 25 cents right now. Man, so that's my order. Let me see if I can. What I'm trying to do is I need to copy the trade so I can put it over in the chat. All right. So I'll bring it over to the chat. I mean, everyone saw me put it on. So there it is in the chat. I got it for 20 cents. All right. And price is moving up now. I mean, damn. You know, I don't know. Am I dreaming? Is this a bad trade? I don't think it's a bad trade. Yeah, it's effectively a debit spread because the backside spread is worth nothing. But why? You know, that's fine. Let's just hope that it moves up, right? If it moves up at all, I mean, if it just moves up 5 points, I make nearly $75. Look at my fill prices. What's wrong with my fill prices? There's nothing wrong with my fill prices. Cost me 20 cents to get in. I don't care what the fill price is. 20 cents is 20 cents. You know, there's a it's hard to pay lower than 20 cents on an SPX options trade, no matter what it is. And it filled fairly quickly with just one adjustment. So we just need the price to go up. It could be that, you know, the market is saying there's, like I said earlier, there's no way in hell this is going up. But what happens if in the next 10 minutes it just decides to just go on a little trip here and go up about 5 or 10 points? I'll bank that. That's worth about $100. But could be wrong. See, if it just did what it did here, this little doohickey, that would make this trade worth a lot of money. Yeah, I don't really care what's happening with each of the spreads. All I care is if price pops about 5 to 10 points. If price pops 5 to 10 points, I'll be able to bank at least $75 off of the $20 that I bet. Ernie, do you consider looking at TLT and XLF to predict what direction the market will go? No, because they're those are bonds, and I've never found them to be forward indicators at all. I mean, if you're going to bet, why do the ETF, which is a derivative? Just do the futures, which the derivative is comprised of. Well, I do know that our other trade here is doing really well. See, now it's only worth 5 cents. See that? So that's why it wasn't really worth anything. I don't know. I thought that was worth the shot. What the hell? let's take a look at our other trade, which is this one right here. Now this trade is just absolutely killing it. We're almost exactly on the pin. The pin is right here. And it is worth, let's see, how much is it worth right now? Cost $1.15, it's worth $5.25, so it's worth well over $400. Yeah, I don't, okay, throwaway trade. The final hour trade was a throwaway trade. So if we were to close right here, this trade could potentially be worth about $800. But who knows? We might get a big run up, right over to this one. Wouldn't that be cool? That if price just decided to run up at the very last minute, it's not going to happen. Not with just 14 minutes, 13 minutes left. Now, right now, there is a very big gamma risk on the table. And what that is, let's see if I can turn off this trade. So what that is this, the profit curve. You see how steep it is. That steepness is actually that if you were to draw a tangent on it, that slope is considered the gamma. And when it's that steep, then small changes in price will affect the price of the option dramatically when you have that steepness, because that's the rate at which price will change. So that's what's meant by gamma risk. Now, there are ways to, quote, gamma hedge. Now, it depends on what direction you want to hedge in, but I don't think it would be worth it right here. So, for instance, if I wanted to hedge on this side, I would probably put a credit spread on this side that has risk over here and then profit over here, and it would hedge out the profit curve. So, for instance, you could put on a put credit spread, maybe something like this that's actually worth something. Maybe this one right here. Let's see what that looks like. No, I'm sorry, not a put credit spread. We want a call credit spread. We want a call credit spread. And we want it the other way. Like that. So by putting this spread on, we're taking the risk off the table with the fly and adding potential profit to the downside with the spread. So that would be an example, and see how it would change the slope on this side of the profit curve to a lower slope. That would be an example of gamma hedging, if you've ever heard that term. So I just wanted to illustrate that. Not that I'm going to do it. I'm just saying that that's how you would do gamma hedging. So you use the current spread that you have to remove some of the risk from the vertical, or even just a straight put you could do, and that would hedge to the downside. All right. But I think that we're going to pin this. What a great trade this is. Yeah, forget about the other trade. That's nothing. This is, now yesterday I showed a pin trade. I pinned it, and I mentioned that earlier, within a penny. It's my personal record. I wonder how this one will work out. Can you imagine if you do 2 pins in a row? What are the odds of that? 2 pinned trades in a row. Wait a minute. I have sound effects here. Hold on.
2. No, we don't want that one.
How about this one? 2 pin trades in a row!
There we go. Now that is entertainment. Is this going to pin? No, Kramer doesn't do that. There's no way Kramer does something that cool. Ever. I think this is about, I've never seen a price just hang out in one place for so long and so close. We have under 9 minutes to go. It's got to move out of here. If I were holding right now this position, which I am not, I wasn't able to put it on this morning. I put on another trade, which is very similar, by the way. I would probably take the profit right here. It is currently worth yeah, it's currently worth about almost $500. Yeah, see, we're suffering from gamma risk here because every time it moves over here, see, it went from worth, right in the middle, it was worth $560, and then just moved a little bit to the right and lost $100 just by moving 3 points to the right. That's gamma risk. There's your gamma risk. Less than 7 minutes to go. Let's take a look at the chart. Let's see what that's looking like. All right, so right at the last minute, I think it's going to do one of these doohickeys and center right on here. I'm going to call it and say that it's going to center on 4207. Any guesses? My guess is 4207. I'm putting it up. All right. What is your guess? $42.07. Hold on.
4207.
All right, K-Dog says 4204. JP Swede, 4217. JB says 4204. There's two 4204s. You're not splitting the prize. Adam says 4206.2. Oh, and Jago, he's an outlier. 4215. And so is Dr. Russell, 4216. And Steven Stelmach, 4210. Donald, 4210. Brian, 4213. Everyone thinks that it's going north now. What happens when it starts going south? And everyone's going to change their mind. So I think we're going to go back and forth like this. I think. I could be wrong. See if the person who gets closest gets ultimate bragging rights. All right, we're at 4209. So when I said 4207, it was, let's see. That's what I said, right? 4207? Yes, 4207. Come on. Less than 6 minutes. I'm sorry, less than 4 minutes. So we need to zoom in on this big time. Let's increase the volume. Pump up the volume to 11. So it looks like the POC may have changed. Well, that's probably because of the way I... No, it did change. So pretty soon we're going to start seeing all the traders dump. Yeah, it should say, gotta go, FBI banging on my door. So remember, I said 4207. Jamie is hoping for 4210. There's less than 2 minutes to go. Uh-oh. No, don't do it. Don't go up. Go down. Go down. 1 point. Usually when everybody's dumping, it goes down just a little bit. $42.07 even. $42.06.50. 42.7. Oh, come on. Oh, no. Don't. No. There we go. Right there. Under a minute. Come on. Let's go. Not yet. We still have just a few seconds to go. Come on, stay down there. No, stay down. One little last dip down. Oh, no. I'm not going to win. I think 42.10 is going to win. Oh, man. Did you see that? All right, so now we have to figure out where the close is, right? So how do you figure out where the close is? The way you do it is you go over here and you search for the fixing price for futures. All right. So that's the CME fixing price. And this is going to give us the exact close. Now, it may not have been published yet, or has it? Now, that's pretty quick. 4209.63. That's the closing price right there. 4209.63. All right, let's see. Who was closest? Oh, it was 4207 on the SPX. So I was right. Yeah. I forgot that the SPX is a couple of points under. All right, so that's pretty good. So a 4207, that was a pretty good pin. So 420 right there. So that would be approximately an $810 return on a $115 bet. All right. That's nice. 2 pins in a row. Pretty good. $42.15. I don't know what you're saying there, but that's okay. All right. So I called it. I don't know how I called it, but I did. Looks good. All right. So let's go to the big head here. See, we got the little. All right. Let's just move that out of the way. A little over here. Point it towards me. There we go. Just has to be pointing at my face. Like that. Maybe a little higher. All right, that's close enough. K-Dog has a dumb question. All right. I have a dumb question. Sorry. Say I made this 4205 trade. Do you have to sell before the market closes or let it expire to get paid? No, you're going to get paid. You are definitely going to get paid. There's nothing to do. Just let it expire. You're going to, for every 100, I'm assuming that most people paid $115 because that's where I called it, made the entry. But, I was also saying that I would have liked to got it under $1 or near $1. But regardless, if you're anywhere in that vicinity, you're going to make about $800 per position. So that's not bad. Not a bad day. All right. Unfortunately, it doesn't go into my win column, but I had other winners, so that's okay. All right. So let's so I'm just going to show you my performance since I've been keeping track in the last 50 days. And this isn't necessarily, the room. And it's only for the last 50 days. This doesn't include the performance that we had last year, which was really off the hook. This is only for the last 50 days. Because I decided to start doing some more detailed logging and reporting because people kept on asking me for that. So it's a good idea. So you can see that started off really strong here. This is with a $23,000 account, currently up about $2,323, so approximately 10% since starting, so 50 days. Averaging about 6% a month, I guess you could say. So approximately. And went into a little bit of a drawdown and went sideways. This entire sideways move here is during the bear market rally. Oh, I'm not even showing it. Like, duh. All right, so here's the performance. And this is just with a singular contract, trying to, water it down to exactly what I was doing. And like I said, a $2,300 net profit, starting with 23,000. Started off strong, moved sideways for a while. Developed our biggest drawdown to date just last week, and it was really a tough week. It just relentless. But they were all small trades, very small trades. And then the move up were also very small trades, but at least we're going in the right direction. Sooner or later, it's going to, kick a gear and it's going to really get going, which is what normally happens. Generally, trading this type of strategy, you're either moving up quickly or moving sideways quickly or sideways for a while. But very rarely do you really draw down. So you can see that the max drawdown so far has been just under 3%. And all right, so let me show you some other stats that are kind of interesting. So if we were to, here you can see the winners and losers. There's a lot more winners than losers. I'm sorry, a lot more losers than winners. That's for sure. The win rate, I think, looks artificially high at 49%. And that's only because in the last several trades have been winners, but they've all been really small winners. Really, the last 10 trades have been all really small winners. But that's okay. They even things out. And occasionally you get these outsized winners like this one for 529 and this one for 579 and this one for 668 and this one for 1100, etc. And this one for 900. So you get these really intermittent, about 1 out of every 10 trades. Well, let's see. Let's count that up. 1, 2, 3, 4, 5. So there's been 5 outsized winners, or what we call pins, out of 63 trades. So that's just about 1 out of every 10. So about 1 out of every 10 trades. So everything that I'm doing is right, like almost 100% in line with my historical averages. So 1 out of 10 trades, or I would say that it's more like 10 to 15% is what I've been quoting people. 10 to 15% of the trades end up being pin trades. The average trade is usually about 150% return on capital, maybe 200% return on capital. Let's see. What is the average winning trade? Well, I'd say that that's about 100% return on capital. And that seems kind of low because I've seen in the past that it's been a little bit higher than that, but that's okay. It's still, and that's probably because of this sideways action. Once we get going, that will go up, the average winning trade, because most of our risk that we take is between $75 and $125. So that sounds about right. Sometimes we take $150, $175, occasionally a $200 risk. That's per position. And so that sounds about right. So let's take a look at the distribution of winners. Now this is the interesting part. All right. So this is the distribution of winners, and you can see that it has a nice long fat tail. And most of the winners are clumped up here near the bottom. And of course, then we have all our losers, which are actually more numerous. And then just a few of these outliers that really kind of make the strategy. And that's pretty much the way it goes over the long term too. So we're only 50 trades into this. And I think once we do 500 trades, you'll find that this general distribution will be pretty much in line with this. And so I have a simulator that simulates my account. And so let me set it up so that it mimics exactly what my win rate is right now. I'm not going to put it at 49% because I think that's pretty high. I'll say 45%. Last year, I was up around 60%, but that was really off the hook. The fees refer to the fees on a butterfly trading the SPX options both in and out. Sometimes it's less than that because I let it go to expiration, and so I only get half the fees. So that would include the commissions plus the exchange rate fees. And then the max winners, I'm going to put like the median price from $5 to $700. Now I have a distribution function built into this that will record outliers too. It can go beyond the max winner. So this isn't just a range. This is kind of like a median range. And then the minimum losers, the min to max losers, same thing. These are the median prices for high and low. And then if we take this account here in the middle, so I'm simulating 3 traders. And here's trader 2, and that's the one with the 20,000. So if you combine trader 1 and trader 2, that would essentially be the account that I'm trading, right? But let's say it's trader 2. So we can go over to trader 2. And we can see in this instance, starting with $20,000 after 2 years, this is 500 total trades. Everything is simulated, including the skew and the median price, the randomness in terms of, well, certain aspects of the trade and how we would actually manage profits. That's simulated as well. So this is a fairly accurate. When you say accurate, you can run this thing 100 times, and you're going to get very different results every time that you do it. But the average will come out to something that will be probably pretty close to what you can expect. But in the same vein, you could, if I started trading this, I could be any one of those ranges of results, right? Who's to say that I'm going to get the average? You can't really go by that statistical average. It really means nothing. But anyways, let's cycle through a number of different instances. This is like saying, okay, we're going to have 10 parallel universes where Ernie's trading $20,000, given all the same conditions, same returns, but acting a little bit differently on each one. And this is what we're going to get. So the first one, we get let's see, all right, gross profit right here. So the first one we get $51,000 on 20,000, right, after 2 years. And a max drawdown of just under 7%. Now, the next universe, 49,000. Next universe, 45,000. Next universe, 44,000. 49. 49. I just got a flashback. Number 9. Number 9. Number 9. Number 9. 49. All right, let's keep on going. 45. Notice this one has a little bit of a drawdown and then really takes off, then moves sideways for, wow, almost, I guess that would look like about 5 months. 46, 53, there's a good year. 51, 55, 46, but no real bad years. 41. And that really is a function of the win rate. If I brought the win rate down, I was trading at something closer to, say, 42% for a little while. And that would give us different results. All right, so there's 42, 36. Now look at this one. That's a crazy year. That can happen, you know. It's the same strategy, same parameters, everything, and you can have a bad year. But it ended up positive, so that's the good thing. Oh, look at that one. It's amazing that you can take the same things with a normal distribution that has skew and kurtosis applied to it, and then all the other factors that go into the randomness of how we actually trade and profit taking, and how you can get such different return results. But this is trading at 42%, and you can see that what it actually ends up being. Oh, this time it only, even though I set it for 42%, on this particular year, it was down as low as 37%, or this 2 years, because it's 500 trades. 39%. So anyways, that's the simulator. And really the reason why we use the simulator is so that we can set our expectations correctly. Let me go back up to the big head. And all right, Vadim has a question. Hey, Ernie, did you model the correlation between percent of profit target and profitability of the strategy? Say you take 75% as opposed to 150% profit routinely. Would that increase or decrease the? No, I haven't modeled that. It's sort of an assumption, so it's built into the calculation. So maybe there would be a factor that I would put in there where you could dial up your conservative, whether you're conservative or liberal in how you actually take profits. So that might be an interesting thing to model in there and see how that changes the numbers. But that, you know, it's another factor that you have to put in, and I don't know if it's going to be useful information. All right. So the reason why we do this modeling is so that we can have proper expectations about, well, what happens when you are in a sideways move? When you're moving sideways, like I was for the past 3 weeks, after a while, you start becoming, I don't want to say doubtful, but thoughts start creeping into your head. Am I doing the right thing? Am I behaving the right way? Have I optimized my entries, my exits? Am I in the right emotional state? All of these things are going through your head. And so what you want to do is you need to log and journal all your trades and then periodically review them and see if there's anything that you can correlate to your state of mind and the actions that you took, both thought and action, with the performance. Now, it takes a fair number of trades before you can see correlations. You know, even after 50 trades, I'm not sure that that's even enough. I think you probably need about 100 or more. And if you see a pattern start developing, what you can do is develop a habit killer. So in other words, you create another habit that will diffuse the bad habit. And we do this constantly. And that's the whole purpose of logging and journaling, so that you can find these patterns and then create these bad habit pattern habits, or bad habit pattern habit fixers. I don't know what to call it, but basically you're creating new habits. And that whole idea of creating new habits is actually a skill. And staying on track is also a skill. So I liken it to, I'm going to use an analogy here. This has nothing to do with religion or anything, but I'm going to refer to Buddhism and what are the 4 precepts of Buddhism. Now, first of all, you should know that Buddhism isn't a theological religion. It's more of a philosophical religion, if you want to even call it a religion, because there's no real God in Buddhism. Buddha wasn't a god, he was just a man. But anyways, the precept of Buddhism, there are 4 steps. 4 steps to reducing or eliminating suffering or any kind of ill feeling or bad direction, staying on the straight and narrow, as they say. Buddhism is built all around that. And the 4 steps are this. First of all, you have to identify that there's a problem. So that's what we do with journaling. We identify that there's a problem. We see a pattern. Then you have to identify or try to figure out what the cause of that problem is. Again, we try to then do a correlation between the problem and the effect. Then the 3rd step is to come up with a plan to come to some cessation of the problem, to fix the problem. And so that's exactly what we do. We create this this new habit that will hopefully negate the bad habit and then get us on the right path. But it is still even more than that. There is the 4th step, which is actually enacting that cessation plan. And that's called the path. And the path is primarily composed of right thinking and right action. Now, in Buddhism, it gets all into the morality and stuff. And I personally think that there's some of that component even in trading, that you have to have, a good moral character. And I mean, you don't have to, but I think it helps to have a good moral character and good thoughts that tends to engender more positive things in your trading. And so as long as you can keep the right mind, right thought, right speech, right action, you stay on that path. So in a lot of ways, what we're doing is kind of like mimicking the philosophical renderings of Buddhism. And in fact, if you look at my logo, the Zen swoosh, that's meant to depict that circular path, that continuous improvement that we always do. And in fact, as a side note, I've practiced Zen Buddhism. So that's the whole purpose. So you see the little swish and then the DTE, 0 or Zen DTE. So that's what we do here. We practice trading Buddhism, which is distinctly different from just regular Buddhism. This is all around, how do we become the best traders that we can be, as opposed to how can we become the best person that we can be. And of course, it is a never-ending task. A never-ending task, because it's continuous, and there is no end goal. And this is something that's very different from what other people are doing in trading. They're always looking for an outcome. I want to become the best trader. I want to make $1 million. I want to make 20% a month or whatever it is. We don't look at it that way. We look at it as a continuous improvement process to stay on the path. And as long as we stay on the path, we know that good things will come. The outcome can be wide and varying, as you saw from the simulation. Same stuff, same inputs, same criteria, but very different outcomes depending on what universe that you're in. So that's what we're doing. If you enjoyed that explanation, please go down, give this video a thumbs up. If you're not already a subscriber, subscribe. Recently got over 10,000. Now I'd like to see it take off to a different trajectory, to a different path. And hopefully you'll be back for tomorrow with our final hour trade. I want to say peace to you all. And thank you very much for showing up. We'll see you then.